as a startup founder, you are trying to tweak your financial metrics. And here today, we're going to discuss 5 key metrics that you need to track. At the same time, we will also show you 4 important issues that are happening with financial metrics and founders' mistakes. Here today with me, I have Angelica Morrone, the hedge fund manager and an angel investor who invested in 17 companies. Let's get started. Hi, Angelica, and great to have you again. Let's get into the topic.
Hello, Daniel. Hello, everybody. Thank you for tuning in. I'm looking forward to today's topic. It is actually a topic that is very close to my heart. What we're going to talk about today is how to use numbers and specifically how to use metrics to have success and to be able to communicate what is necessary. There is an old saying in English that is, revenue is vanity, profit is sanity, and cash is reality. Some people also say cash is king or queen, depending. So why do we say that? Because while revenues is something that can be tweaked a little bit, and also unless you know exactly what kind of expenses and what kind of other issues you have in the company, very, very difficult to know if that is a relevant item or not. Revenue is a good thing to have, but it's only a starting point. Profit is amazing. Profit is going to start showing your investors that you're really doing something right, that you have all of your ducks in a row, and that you're able to put together a good business model to achieve some profit. But then why do we say the cash is reality? Because at the end of the day, profit, you may be making a profit, but if you do not have enough cash in your bank to actually make the payments and meet all of your financial obligations, then your company is going to be in trouble. I totally believe this saying, and that's why I wanted to open with this today. Quickly, I'm going to say something that many of you maybe already know, but is always a good refresher. We have 2 types of numbers for any company, startup, and any enterprise. One is are in financial accounting, and the other set is in management accounting. Financial accounting usually is used to look at the past, to look at what has happened in the past and how to report that, usually for financial authorities. Management accounting is a view to the future, so that we as management can decide what metrics to use and what to measure so that our strategy is set up and our communication with all of the outside stakeholders is done. There are some key metrics that all of us need to keep in touch with all the time. The revenue, also called turnover, when you're going to go break even, what is your profit, do you have cash, do you have free cash, and what is your burn rate? These are 5 questions that every single investor will ask. And it is amazing how many people are still not really ready to answer this with some kind of self-assurance, which is, as we said in the past podcasts, which if you have not seen them, I would invite you to go and see, is very, very important. So why are numbers so vital to the life and to the communication of any company, any startup? Because without the key metrics, you're not going to be able to see really and benchmark what is needed in your sector at your stage of development. And you'll not be able to make comparison with other companies unless you've done that. You also have to know how to track with a financial dashboard and how to communicate them. And remember that since only the market can pass or fail a product or service, if you have the right numbers, all of a sudden you're on track to have a passing grade. What are 4 of the most common issues that every single startup encounters? And why is it important to know and to measure them? First of all, is the cost of the proof of concept. Very few people realize that you have to know how much a proof of concept is going to cost. Otherwise, if you're going to put together a business plan, that is going to be a big hole that can eat up a lot of energy and a lot of cash. Same thing for the cost of the minimum viable product. The cost of validation is another important one, which is usually overlooked. Many people don't calculate it because they think that I'm just validating. I really don't need to put some numbers to this concept. And the other, and it's becoming more and more expensive, therefore more and more relevant, is the cost of a go-to-market strategy. In order to illustrate to you how important this is and how very much real life this is, I will talk to you about one particular project which had to do all 4 of the cost factors in all four of the metrics. The product is a circular economy larvae producer. This is a company that has larvae eating refuse, organic garbage, and turning it into noble protein to make pet feed. You may agree with the topic or not. Circular economy is very common nowadays, but it doesn't matter. This applies to just about everything. So what happened with the proof of concept? They had to open a new market niche, which required a lot of PR effort. That required both money and time. The person, the entrepreneur, had not really realized that. So her validation of the proof of concept was pushed 9 months. Had she really calculated that properly, it would have been much, much faster. The other one is that she had is issue with the MVP cost, how to cost a minimum viable product. The minimum viable product in this case had to be a small industrial plant so that it can replicate a big industrialization model. Once again, this had to be almost full scale and viable, which means that the product that was coming out had to be just about perfect. Otherwise, it couldn't be validated with the client. Once again, very, very high cost. She had to go through a first seed round only to validate only to cover the MVP, to validate the MVP. The other one is the validation cost. What do I mean by the cost of validation? It is after you have your MVP, you still have to calculate and use key metrics so that you can bring a validation number to the table of investors. They will know that you've really done your homework, and they will know that you're not kind of hoping that everything goes well and the right wing will fill your cells. You have really calculated everything, including what it would take to revalidate in case it has to be iterated. The last one is the go-to-market cost. How many of us have heard that these days, it is becoming more and more expensive to get customers, to break into a market, to do an advertising campaign, to actually find the right clients. And this is a cost that sometimes can be as high as 40% of a fundraising effort. You must absolutely calculate that. This is a metric that will help you a lot. In this case of that I'm talking about, sorry about that, the testers required very large amounts to actually test and agree to buy. One pet food store asked the entrepreneur to make them 1 ton of food. That's huge. She had never calculated that, and she needed, like I said, a second round just to be able to do that. So what can we gather from today's little talk and the importance of key metrics? My little words of advice that if you follow the other podcasts, you know are coming towards the end of our talk is always use data to make financial decisions, and only use financial data to validate your market data. Always be willing to iterate your tests so that if you need to spend a little more money, but be absolutely sure that that is the right test, do that. You will not have wasted any time or money. Also, you need to learn how to communicate your numbers. But please remember, don't make things overly complicated. Investors look at numbers all the time. They like clarity. They like a little dashboard with a few things that can be looked at month after month after month. That's it for me. Any questions from you, Daniel?
Perfect. Thank you so much. 2 quick questions. First, the startups usually at pre-seed stage, they struggle with financial metrics, and they just don't know where to start and what metrics to track. So what would be the metrics for pre-seed stage? You mentioned most of them, I guess. And
Yeah.
do you have some recommendations what template to use for pre-seed startups?
So basically what you want to do, first of all, you want to have your financial accounting in order, so that you want to have, if you have a few numbers, try to put together a balance sheet, an income statement, and a cash flow statement. Even if they're very basic, please try and do that. Also, calculate your burn rate. based on your current need and on the needs down the line. Because of course, a startup is a very fluid, entity. You have to be able to change things along the way. So the burn rate is a good one. Another one very interesting to have and try to calculate it from the beginning is the cost of a customer acquisition. These are the things that I would recommend everybody to have handy all of the time.
Perfect. That was Angelica Morrone, and we were speaking about financial metrics and our advice for early stage startups. Those who watched us, don't forget to press the like button. This is super important because more entrepreneurs can see it. Subscribe and leave your comments. We will be happy to answer your questions. Thank you, Angelica, again, and I'm looking forward to for our next talk.
Thank you very much. Thanks everybody for listening in.